Today, they're going to try to stump me. I'm an EA with over 20 years experience.
And you don't know what's coming.
Okay, here we go. Let me start again. Hi.
Don't. Not that one.
Just hi. Just
hi. Welcome.
It's your eyeballs.
We're gonna try to get stumped on Stump the EA. Here we go.
So I've been watching FIFA, the whole soccer thing. It's been great.
Yep.
And so it hit me. I first of all wish
Hopefully
I had.
not too hard.
Huh?
You said it hit you.
I wish I lived in LA
Careful there,
because
Tracy.
the first thing I would do is if I had a house, I would move in with grandma for about 2 weeks and I'd rent my house out as an Airbnb for all these people that have come because there's so many countries that are represented and people that have flown to the U.S. for this. So say I did that. 12 days. I have income that comes in. How do I report that?
You know, this is why the Augusta Rule exists. And so it applies. So you wouldn't report that.
Oh, nice.
It's pretty awesome. So how long does the Augusta Rule last? How many days?
14.
Oh.
So can I do like 14, 15, don't do anything, and then do another 14?
No.
Okay.
So total for a year, 14 or less, you don't have to report.
Gotcha. Why do I owe taxes at the end of this year when my employer took out taxes from my paycheck?
Well, there's more than one type of tax. I know it's weird, but
what?
Everything is taxed in America, and there's more than one type of tax. You have FICA tax, which is Social Security tax, Medicare tax. You've got your income tax. So you could have no income tax withholding all year, and they could only have pulled the FICA, and you're going to owe. You could have had withheld tax all year, and you would still owe. Depends on your W-4 and what you put on there.
So what happens if I can't pay the tax that I do owe?
You go straight to jail. No, actually you don't. In America, you don't go to jail for owing tax, which is nice. But you do have a problem. You could get into an installment agreement. That would be an option. It is hard to pay 2 years of tax in 1 year. It's just difficult because it's a lot of money to pay. But you could get into an installment agreement, which the IRS is the worst bank, or you might go borrow the money, which is also not a good plan, but it's better than owing the IRS, and then pay the tax and then pay back the loan.
Can I claim my pet as a dependent?
No.
If someone converts a traditional IRA to a Roth at age 67, does the Roth conversion have its own 5-year rule, and what exactly does that rule affect?
It does not have a 5-year. 5-year rule doesn't apply. If you're under full retirement age and you do your conversion, then you have to wait 5 years because it has to do with the 10% penalty.
Gotcha.
Because when you pull money out of that Roth, you've paid taxes on it. And so people were using that to get money out of the Roth to avoid the 10% penalty. So that's why they created the 5-year rule.
Say I live in my primary residence for 18 months and my employer transfers me to another state. What kind of exclusions would pertain to my home ownership and selling of the home and only owning it for 18 months?
Yeah, so gain exclusion still would apply to the 18 months. So it's prorated. Because your employer had you move and you had to move for your employment, it would be prorated. That falls within the rules of exceptions. You calculate the $250,000 or $500,000 married filing joint divided by the 24 months, and then you take that times 18 months, and then that would be your amount of gain exclusion available.
A married couple files jointly. One spouse owes past due child support. Can the other spouse recover their portion of the refund, and how?
They can. They have to file an innocent spouse relief, and that would allow the spouse that doesn't owe the back child support to get whatever portion of refund to that spouse, and then the other spouse, their refund would go to child support.
If this were a test, you would fail. False.
Whose kid is this?
The confusion is injured and innocent. There's both. Injured is like they filed and signed for me, and I had no idea that there was something on the return. I get them confused sometimes. Ask me that one again.
I got to read it.
Oh, we're going to repeat this
We
one.
should get the right answer.
Oh, we should get the right answer? Do you want me to repeat the answer?
Just repeat the question.
Oh, repeat the question.
Yeah.
A married couple files jointly. One spouse owes past due child support. The other spouse would like to recover the portion of the refund. And how can they do that?
Yeah, so this is where you would file the injured spouse relief, which would allow the one spouse to get their refund, whereas the other spouse's money is going to go to back child support.
For those of you that didn't know, we just cut, and
No,
he
he
actually
didn't cut it.
know
She's
the
probably gonna
answer.
play it.
And so this is why.
I did know the answer. I just get those two confused.
Gotcha. Okay.
Injured and innocent.
We did stump the EA, by the way. All right. Hit it, Tracy.
Here's a scenario where we have a taxpayer who inherits a traditional IRA from their father in 2022. Under the Secure Act rules, when are the required minimum distributions due? And does the answer change depending on whether the father has already begun taking the RMDs?
The inherited IRA, they've got 10 years to zero out the funds. So they can take it all at once. When they first get it, they can take it 1/10 over the 10 years. They can pull it at the end of the 10 years. It's up to them. Doesn't matter if the father had already started taking RMDs. Y'all do realize how hard, like, the knowledge that is rolling around. Okay, just saying.
That's easy.
Like, the code sections are extensive on this one.
No, it's tricky. Can an S Corp reimburse a shareholder employee for home office expenses, even though employees can no longer deduct unreimbursed employee expenses on Schedule A?
They should. They should reimburse for home office expense as long as they keep it the same across the board. So yeah, if you've got multiple employees and you're going to reimburse them for their home office expense, you can. It's a deduction to the entity, and it's not taxable income to the shareholder.
What if IRS has put a lien on your home because of back taxes? What happens then?
Well, it just means you can't sell the home without paying the IRS. So if you sell your home, then a portion of that money is going to go pay the IRS after the bank is paid off. And so that's all that means. A lot of times if you owe over $50,000, they're going to do that. Even if you're in an installment agreement, it's very common. You can get the lien released. You can't refinance. And that's the biggest problem people run into is they try to refinance the loan, or they need to refinance the loan, or like this happened a lot around 2020 when rates dropped, to whatever, 2.6% or 3% or whatever. Well, if you had that lien, you couldn't refinance.
So basically people were trying to keep their homes by refinancing, but actually they still
Well, they were
had
just trying to
debt
lower their interest rate, but they
Right.
couldn't because they had a lien.
because they really needed to pay their debt to IRS.
Right. So they
Yes.
would have to do a cash out refi and then pay IRS, or they would have to do something.
Thanks for joining us for another episode of Stump the EA, as we have once again not stumped the EA.
No, I did.
You did not.
Well, we got pretty darn close.
Close is not a win.
All right.
Okay.
Hi, we are robots. Welcome to the Robot Show.
Robotic solo.
Okay,
Zero,
we're going to talk about inflation and then do the
Robot
stump.
solo. Binary solo.
Can I just start asking some questions?
110000001
Such a great song.
Binary solo.
Epileptic dogs.
The robots are taking over the world. Now you know. If you don't know, sorry about you.